Today we're going to talk about California drop shipping sales tax audits. How do suppliers end up owing sales tax they never collected? Many wholesalers, distributors, and e-commerce suppliers assume they are making simple resale transactions. After all, there's no direct sale to a customer. There's no sales tax collection responsibility, or is there? Therefore, there's no problem. But California's drop shipping rules can turn that assumption into a very costly mistake. In some situations, the supplier can become liable for sales tax it never thought to collect. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA, and I'm the sole owner of the tax law offices of David W. Klasing. We have over a dozen offices across California to serve you. Today I'm going to explain how California's drop shipping sales tax rules work, why CDTFA audits focus heavily on documentation, and how suppliers can unexpectedly become liable for California sales tax, and what to do about it. First of all, what's a drop shipment? A typical drop shipment involves an out-of-state retailer, a supplier somewhere in the country, and a California consumer. But the customer buys the product from a retailer. The retailer then instructs the supplier to ship the product directly to the California customer, never taking possession of the goods. The customer sees one transaction. The CDTFA sees several. And the key audit question becomes, who's responsible for California sales tax? Who needs to report it, collect it, and remit it? Let's look at California Regulation 1706. It's a trap. California Regulation 1706 creates one of the biggest risks in drop shipping sales tax audits. In certain situations, the supplier may be treated as the retailer for California sales tax purposes. This often occurs when an out-of-state seller is not properly registered for California sales and use tax purposes. Many suppliers discover this risk only after the sales tax audit begins. Listen, documentation is everything here. The strongest defense is documentation. When the CDTFA comes in, they're going to review your invoicing, your shipping records, your marketplace reports, your resale certificates, your customer records, your bank records, and seller permit information. California doesn't care who pays as long as someone does. The goal here is to determine which party actually bore the California sales tax responsibility. Without documentation, the auditor is probably going to default to a sales tax liability theory that places the burden on the supplier if nobody else collected and remitted. Marketplace sales change this analysis. If you're deemed to be a marketplace facilitator, there are special rules that apply to you and may have changed many transactions. For sales tax facilitated through Amazon, eBay, Walmart Marketplace, and similar platforms, the marketplace facilitator may become the retailer for California sales tax purposes. But businesses should be careful. Not every transaction qualifies for marketplace treatment. The CDTFA often separates marketplace sales from direct sales off of your own website. They can pick those up in a sales tax audit. There's also a 10% markup rule in California. One unusual feature of California drop shipping audits is the markup calculation rule. When the supplier doesn't actually know the final selling price of a good they're shipping, that's paid by the California consumer, California may permit a calculation based on the supplier's selling price plus a 10% markup. This often becomes a major sales tax audit dispute, especially when records are incomplete. Listen, resale certificates still matter here. Even in a drop shipping case, resale certificates remain critical. A timely, properly completed, and good faith resale certificate can help overcome certain sales tax liability presumptions. But missing certificates, late certificates, or poorly documented transactions can significantly weaken your defense. So in closing, if the CDTFA is questioning your drop shipping transactions, your marketplace sales, your resale documentation, or they're searching for California nexus, This is the stage to act carefully. At the tax law offices of David W. Klasing, our dual licensed tax attorneys and CPAs help businesses analyze transaction chains, challenge unsupported assessments, and respond strategically to CDTFA audits, all the while minimizing civil and potential criminal tax exposure. Call 1-800-681-1295 or visit klasing-associates.com to schedule a confidential, reduced-rate initial consultation today. You won't regret it. Dave Klasing, tax attorney, CPA.